Yesterday, the euro extended weakness against the US dollar, weighed down by downbeat data on manufacturing activity in the euro area and its member states. Overall activity in the region's manufacturing sector contracted further in May, while services activity expanded, but at a softer pace than anticipated. As a result, the euro faced a sell-off, hitting a new one-month low. Nevertheless, the European currency managed to enter a slight correction supported by rather gloomy statistics from the United States. The flash US manufacturing PMI for May 2023 stood at 48.5, indicating a deterioration in manufacturing operating conditions from 50.2 in April. However, later on the euro came under pressure again. Speaking on the pound sterling, the situation was similar. Downbeat data on British factory activity dragged the currency down to a new low, but then sterling managed to gain strong upside momentum as part of a correction. Currently, the British currency is trading upwards, driven by today's UK inflation data. On a monthly basis, consumer prices rose by 1.2%, above a consensus estimate of 0.8. Annual inflation came in at 8.7%, topping analysts' forecasts of 8.3%. Against this background, traders expect the Bank of England to keep raising interest rates to combat persistent inflation. As for other news releases, today's macroeconomic calendar includes German business expectations, current assessment, as well as the IFO Business Climate Index. The small data from Europe's largest economy will most likely bring the euro further down. Traders may also take notice of speeches by Bank of England Governor Andrew Bailey and US Treasury Secretary Janet Yellen. Furthermore, the US Federal Reserve is set to release minutes from its policy meeting. However, these reports will hardly have a severe impact on market sentiment. After all, things have changed since the central bank's latest meeting. Now, policymakers highlight the need for a pause in the interest rate hike cycle. The focus of market participants will remain on Washington's political showdown over the debt ceiling. On Tuesday, Krenemo's talks on this issue ended with no new progress and with no new meeting set. So it is unclear what will happen next. It is possible that the parties will resume negotiations on Monday. Thus, the US is edging closer to a potential debt default. The situation is heating up, with stock markets suffering losses. Against this backdrop, even if data from the euro area or Britain turns out to be upbeat, demand for risky assets is unlikely to recover. And now let's move on to technical analysis. According to the 1-hour chart, a false breakout at 1.0799 amid gloomy statistics from Germany will create a sell signal, thus dragging the euro down to 1.0762. If the price breaks through and fixes below this level, the volume of short positions will increase, with the euro sliding to 1.0716 and 1.0674. At the mark of 1.0674, I recommend going long on a rebound. Long positions at 1.0762 and 1.0716 can be considered only amid a false breakout. Also, going long will be relevant if the price consolidates above 1.0799. In this case, one can count on a rise to 1.0833. At this level, it would be a wise decision to sell the pair on a rebound to catch an intraday correction of 25-30 pips. As for the British pound, a false breakout at 1.2466 will make it possible to go short, bringing the currency back to 1.2417. At this mark, bulls will probably regain control of the market, so traders are recommended to buy the pair amid a false breakout. Alternatively, if the price overcomes 1.2417 and fixes below it, the British pound will extend losses deep into 1.2373. At this level, traders may go long on a rebound. In case bulls take the lead at 1.2466 following Bailey's comments on the need for more rate increases, sterling may gain strong upside momentum approaching 1.2507. In this area, it will be possible to go short on a rebound, counting on an intraday correction of 25-30 pips. Best of luck!